Good weekend, all. Ira Epstein with your weekly edition of your SPDR ETF market wrap-up. And this wrap-up is for May 6th, 2022. All right, I want to wish all the moms out there happy Mother's Day. If your mom's around, go wish it to her. Otherwise, go visit her wherever she might be. What can I tell you? All right, what a week. I'm worn out. I mean, worn out. This is a week that will take you, if you're a market analyst, a trader, whatever it is, but you make your living in the markets, it took you to it just ripped you apart. One day dramatically up, next day dramatically down, but that's what bear markets do. Get away from the people that think you buy the dips. You're not buying the dips. A bear market doesn't reward the buying the dips. Bear markets do reward selective stock buying, not index buying, nothing like that. Once you're into the spiders to take a bunch of them in, no. You've got to learn the difference between the markets. Indexes as a whole are going to be weighed down with enough of the stuff that's under pressure, so you've got to pick the individuals. Got it? Second thing, you will get what's called flash rallies. Bear markets, flip-flop of the bull markets, we had the flash breaks, you get the flash rallies. That's what we just had. They typically don't last long. We're talking, the flash ones could be 24 to 72 hours. That's what I've seen in my history of trading, and I've done this lots of years. I'm in my what? I started in 69, so this is 53 years ago. So I've seen it all. And you remember, and you lose in it. You know, traders that don't get that, it's these young kids that have to learn this. You learn with your losses. You don't learn making money. When you're making the money, you're going to keep doing it. You think the same right thing over and over. But you learn what? You learn a 10-year bull market. What do you do when you're in a bear market? Can you tell me where the meme boys are from Robinhood? Have you heard anything recently about them? I don't think so. What's Robinhood stock been doing? Plummeting. Why? It's built on bull market investors. You're not hearing that happening to the other stock companies that have been around. I'm pointing this out. It's my own take on it, but I think I'm on a track there. When we look at AMD, it's trying to give you a bounce. As I mentioned during the day, the semiconductors are trying to put in a floor of some type. Not every one of the companies. AMD tried, and here we go. You have a market with a higher high, lower low. On a weekly chart, it's a bounce. It is not a turn of a trend. If you think that is, I think you need to go to charting school. Where's the market trying to hold? It's pretty clear. It's the 100-week moving average of closes. The most I'd look for, if it can get something going, is wherever the 18-week average comes in. That should be the real resistance zone. And the support is the Bollinger Band, but you haven't hit it. You haven't hit it in a long time. It just keeps skirting the issue, but I noticed that. There's another study I don't show you here called window envelopes. They're very important. Kramer and that group typically use a standard deviation that you move away from a centerline moving average. I do it differently. I tried that and I found that I had a better way using my swing lines and certain other rules that I put in. I've never taught it. I'm finishing up my outside day course, and I'll probably do that the one afterwards. It's staring me in the face, and I'd like to have people learn it. It's much more complicated than the others. Way more complicated. But I use it all the time, and it has served me well. So this is where I can see the market arguing for a bit of support. It is not screaming, I am a bull market, but it's also saying I'm not as bearish as the first break that happened. I could resume that. That's what, if I were AMD, I'm saying to myself, I could resume that, but you haven't resumed it. You got to be paying attention. If you break last week's low, then I think you got a bigger problem. When I look at momentum, it's still embedded. So here on the weekly chart is the issue. The pros are selling. The pros are not buying. The pros are selling at the 100-week moving average. They're wrong if the red line closes over 21, and they're right if they get to the Bollinger Band. The problem is you haven't hit the Bollinger Band. So that's why I think you could be in the transition stage in this in a way. Now, KBE. This is your bank index. You came down and now you're again at the 100-week moving average in the lower Bollinger Band. You have a market, is it embedded? So let's take a look. You have to have 3 weeks in a row where both numbers that make up the slow stochastic are embedded. I know some of you are going to say, my numbers don't match yours, Ira. You're right, they don't. I will give you what I do when you're a paid subscriber of our service. Futures at ETFs doesn't matter. But here you are with it. Now, I'll show you how to modify your software so you can get this. At least I'll tell you, you do the modification. I'm not getting into all of that. But in any case, by the way, it's typically simple. Both numbers are under the 20, they're under the 20, they're under the 20. So week 1, 2, 3, you're fully embedded. What does that tell me? It tells me on further rallies that I certainly am looking for short sale opportunities until the red line closes over 21. And the fact that it just got down there on a bounce, I don't think it'll just lose it 1, 2, 3. So I think you're going to see aggressive short selling with the goal getting back to that 100-day average on the market. In KLI, very different, not embedded. So I think the pros covered shorts just now, this week and last week, and they called it a day. I think they walk away for a little bit from that market, see what the patterns develop to. XLE, if you take a look, you had a fully embedded reading. You then start losing it, you come down here, and you get a reading 77.95. I teach that's where you come out of the market. I also teach that if on the next week only 1 week after, that's the only time it can happen, if you get a reading on Friday that is back over 81, the reading's embedded again. And the odds favor you're going to go up and try to run into that upper Bollinger Band. What can I tell you? That's what I'm seeing. SPY bearish into the support of the Bollinger Band. Could it reach down if it wants and hit the 100-week average? Yep, but it's not embedded. That's where I think short covering is going to come in. This could be a bounce week we get coming up. It could be. You've got the setup there. Gold's not doing anything favorable on a weekly chart. Higher high, lower low, it's got nothing going for it. The gold miner's nothing going for it. For those of you that follow my updates, you know that on the dailies, I've got you pretty much, I've been bearish on that market and it's worked out. ARK, interesting. New lows for this whole move. I have no idea why people keep throwing money back into this. Let it turn up and then I can see it, but it's not there. And she dumped all her Twitter holdings. Now, I don't even understand that. Either she knows something or she left money on the table. At $54.20 and you're dumping it at $48, $49 or thereabouts in the market, there's $5. You haven't done too well. Why are you dumping it? What's wrong with taking that other 10% that you need? Maybe a call strategy, you write some options against it to lock in. I don't know. I'm not a stock trader like that, so whatever. In Amazon, falling apart. Why? Because people are going back to brick and mortar stores. What's wrong with you? Do you ever go out and go to a store now? Do you think there's more people in it than before? You know, in Chicago, we have fabulous shopping, and if you go down the streets, people are in stores. They're carrying bags again. I don't remember them carrying bags during the pandemic. First of all, the stores, you had to make an appointment to get in. It was basically closed. That's part of it. What else is hurting them? At this point in time, I think what's hurting is people are dining out. They're doing other things. They're doing more service than buying there. But that doesn't mean their business model's bad. You go through this transition. Okay, they'll figure it out. Is it bearish? It most certainly is. Do you sell under Bollinger Bands? No, but that's no reason to be bullish. Market's going to have a hard time on rallies the way that I see it. Apple. I'm not enamored here. I'm bearish on the weekly chart. But I also understand at 154.48, if you were next to me, that elbow's hitting you in the side. Boom. And what's it saying to you? Hey, you got to lift your short positions. Each time you hit this Bollinger Band, you've been bouncing from that market. What's wrong with coming out there? Now, the further we get on during the year, we're going to get Apple 14. You know, I'm assuming they can get their supply chains going. I'm buying one. I've been holding back 3 versions. I didn't need a new camera and a battery life. I need the new events that they're bringing in, and I keep reading about it, and I can't wait for the phone. So I like that this is backing off. It'll offer long-term opportunities. Get cheap. Tesla coming down because of Twitter. Hey, you're sitting here and you're just saying, you just announced, was it yesterday, that he's going to be the interim chairman if he takes the company over successfully. Well, that means he's turning his attention away from Tesla. He'll say no, but I can't go to dinner with Bob and then say I'm going to go dinner with Paul an hour later. I'm full. I can meet him, but I'm full. Well, I can run Tesla, but my energy's on Twitter. It's things like that you got to pay attention to. I'm not the only one that sees that. Market backing off a little bit. Okay, it's been in this downtrend. It can get to 752. Now, if it got in real trouble, it gets very interesting because we don't know what Mr. Musk has been pledging. We know that he's putting together his group of money, friends and so on, investors, to take on and take over Twitter, but that's all that I know. What I do know is I look at it and it's going to be the one that doesn't get paid attention to, while this little baby does. Now, I don't see buying a Bollinger Band or a 100-day average. I'd let somebody else do it. Maybe that's why ARK dumped it. I don't know why they dumped it. But that's the resistance point. In order for the deal to go through, it's got to finish. And from here, from $49.80, any way you want to cut it, there's $5.40 on the table. That's 10% of the value. So if I were owning Twitter, I'd probably, can I write an option? What can I do to protect that value? Or if the stock market, if the deal doesn't go through, maybe this falls back to 39. How do I protect myself in some manner? There's strategies out there. TLT, why would you be even friendly on interest rates? The Fed just told you they're going to keep raising rates. You're running the lower Bollinger Band. You're embedded. You're looking, in my opinion at least, to be a seller until the red line closes over 21. Whenever that happens, I'll change my opinion. Sorry about that. We ended that. You know, for your help, what I do in the mornings, this is the fluff. This is not the meat of what I do. In the mornings at 5:30 a.m., I start recording in the future side, because everything you're trading on SPDRs, ETFs, typically, if it's in the financial arena, has something to do with the futures one way or the other. I start there, I'm through, at about 8:50, I actually begin recording at 9 o'clock, right in that zone. These are Central Time, your SPDR ETF video. The reason, by 9 o'clock, the major U.S. economic reports are out. I now get to see what they've done. At 8:50, what typically has happened is we have seen the opening of the stock market and the algorithm money come into it. Now I got a clean slate. And if you watch, these are how these things go. It's like trying to trade futures at 8:30 a.m. Central Time. Why would you do that? You're going to get the swings as the stock market's opening and they're balancing out the portfolios as the money's coming into the market. You'll see it opens up 30, down 30 in the Dow. All of a sudden you're up 100, you're down 50. It's crazy. You learn those techniques very quickly and you stay away from that. Well, right here, I'm covering all that for you, 40 charts. And at 9 o'clock, I turn to the ETF categories and I'm doing another 40, and they are specific. Boy, are they specific. Buy here, sell there. Here's where I'm right. Here's where I'm wrong. Take profit, move your stop, do this, do that. Pretty darn simple. How do you get to it? How do you read more about this? And if you want to subscribe, just take your cursor, move it up here, click. It'll take you right to that area. If you go to my website, it's under the word research. In the meantime, all you moms out there, happy Mother's Day, and I'll see everybody Monday.